Disrupting Japan, Episode 25. Welcome to Disrupting Japan, straight talk from Japan's most successful entrepreneurs. I'm Tim Romero, and thanks for listening. Today we sit down with Hiro Maeda and talk about startup accelerators. Now, Hiro's the creator of both Digital Garage's Open Network Lab and the Benos Inception Program. These are two of Japan's best-known startup acceleration programs, but their approaches are very, very different. And naturally, we talk about both the past and the future of startup acceleration in Japan, and the critical differences between the good ones and the bad ones. But what impressed me most about our conversation was Hiro's commitment to running his accelerators just like startups. Now, we dive into the fundamental reasons behind the attraction that Japanese VCs now have for Southeast Asian markets, as well as the reasons behind what we both see as the coming hard times for startup accelerators and the coming good times for Japanese startups. But I'll let Hiro explain all that in his own words. So let's get right to the interview. I'm sitting here with Hiro Maeda of Benos, formerly the man who founded the Open Network Lab with Digital Garage. And today we're going to talk a lot about accelerators, because you're the man that knows.
Thank you.
So thanks for sitting down with us.
Thank you for having me.
Let's get right into it. I'm really interested in your experience in setting up and running the Digital Garage Open Network Lab Accelerator. Why don't you tell us a bit about it and what your goals were in starting that accelerator?
Yeah, so this was back in 2010. So it was right after the Lehman crisis, right? It happened in 2007, and then 2008, 2009 was like no one was investing in startups in Japan.
Right.
So it was basically myself, Joey Ito, who's currently the director of MIT Media Labs, and also the founder of Benos, or the former founder of Benos, Teru, and then the CEO of Digital Garage. We all kind of got together and we were discussing what can we do, right?
Okay, let's back up for a second.
Yeah.
How did all these people end up in the room getting together? Because that's a pretty diverse group of people right there.
Other than myself, those three actually knew each other. And they always wanted to do something, right? And Digital Garage was just moving into their new office and they had some extra space. So it actually started off with, what can we do with this space?
Okay.
And then I got pulled into the discussion, and then I was at the time really looking into Techstars and Y Combinator,
right.
The two accelerators in the U.S. that were starting to do very well. I basically proposed that, why don't we just do this in Japan?
So you were trying to replicate what was happening in San Francisco and in Boulder in the case of Techstars, but happening in the States. You were putting this together, you were learning as you were going. It's been up and running now for 5 years?
Yeah, I think 5 years, yeah.
All right.
Yeah.
When you're running an accelerator, how do you measure the success of the accelerator? Is it the return of the portfolio? Is it the number of companies that are still in operation after 4 years? How do you measure success from the accelerator point of view?
As an investor, the closest way to measure success is return on capital and, I guess, markups, right? So how much more valuable your portfolio is. And we're right now roughly about like 20x markup. So our entire portfolio is 20x more valuable than it initially was.
All right.
Which is pretty good. We'll see how much of that becomes cash.
Right.
And I'm hoping it'll be somewhere above 10x. So that's one way to kind of measure success. But I actually think the purpose of an accelerator, I mean, we do have fiduciary duties to make big returns, but the other thing that we have to do is increase the success rate of startups to get to the next phase, right? And so the other thing we look at is actually how many of the companies that enter our incubator or accelerator are able to raise money from VCs.
Right.
And I don't know what the exact number is right now, but at one point we had 70% of the companies that go through our accelerator were able to raise their next round, whether it was $100,000 or $500,000 or $1 million.
That's pretty good. Listeners in San Francisco wouldn't be particularly impressed with that number.
Yeah.
But anyone who's been dealing with startups in Japan for the last 10, 15 years knows that's extremely impressive.
Yeah. So we were proud about that. We were pretty proud about that.
Well, actually, that brings up a good point. There seems to be a real Series A crunch in Japan right now. What do you think's behind that crunch, and what's the best way to solve it?
So to be honest, there aren't that many Series A investors in Japan to begin with.
Right.
There's only a handful that you can. And so what probably happened was we had more seed accelerators emerge, more seed-funded startups. Those seed-funded startups are having a much harder time raising money.
Here's the dynamic I see, and let me know what you think. The nature of starting a company has changed. You can do it with much smaller teams, with much lower amounts of capital. So the economics favor not only lots of people starting companies, but investors making lots of very small $10,000 to $50,000 bets. So we had a whole emergence of pre-seed, early stage financing come up.
Yeah.
But the people who have to step in next and set a price and put in $750,000 seem to be the same people that were doing it 10, 20 years ago.
Well, that is the case. I mean, there isn't. I don't see that many new funds being formed that invest in the Series A or B range. It's usually the same kind of people, the same brands. Pretty much the same people, right?
And it does seem that most new funds are focused on seed, early stage. It's the strategy of lots of small bets. But what about some of the larger funds now? The Incubate Fund. I mean, these are funds with hundreds of millions of dollars of. There's not enough startups to invest $10,000. You can't invest that $10,000 at a time.
Yeah, exactly. So I'm not sure what their exact strategy is with raising a $100 million fund in Japan. My guess is they want to do more in emerging markets like Indonesia.
Yeah.
And the other is they want to be able to fund the full stack. So they want to be able to fund the seed, the Series A, the Series B, and C. So they keep on doubling down on companies that are doing well in their seed portfolio.
A lot of Japanese investment is going to Southeast Asia now. What's the draw?
Because like Indonesia or the emerging markets are 5 years or less behind of what's going on in Japan. And so as an investor, it's kind of predictable, like what are the next things that are going to emerge. And so after the marketplace, it's probably the payment. After the payment, it's probably price comparison. After the price comparison, it's probably some storefront hosting, and after storefront hosting, so on, right? So there's a lot of things that you can do a lot of pattern recognition with emerging market.
Are you investing, well, both you personally and Japanese investors as a whole, are they looking to invest in the Indonesian version of Uber? Are they looking for not copycat technology necessarily, but business models that have been proven elsewhere?
Yeah, that's pretty much the main draw. The other one is predictable. The second is just the upside. So the growth rate in population, the growth rate in GDP, those metrics are like, especially in Indonesia and India, is phenomenal.
The demographics are fantastic.
As an investor, your responsibility, or if you really want to be a good investor, like you should shoot for the upside, like the biggest upside possible, right? So the logical conclusion you would get to is let's enter a market that's growing and growing fast.
When you're going to the Southeast Asian markets, what is the exit you're looking for there? Is it a local IPO? Is it an acquisition by a more powerful global player with the same business model? How do you get out?
I mean, it's both. So there's going to be M&A activities, but we can also expect IPOs. So what's kind of happening, there's a lot more companies outside of New York that are being listed in New York on the New York Stock Exchange. So the Alibaba got listed on in New York. Probably the next Alibaba will come from India, right? And we may see like an Alibaba equivalent coming from Indonesia. The local IPO market is not that attractive, but the New York Stock Exchange is attractive. And we're seeing patterns where more and more companies are looking into becoming a Delaware incorporated company, and so that they can get listed. But then we also see roll-ups, right? So we'll probably see more M&A activities, a larger conglomerate basically buying companies so that they can get market share in the emerging markets. All
right, let's talk about the other accelerator you started, which has a very different model. And Benos was a very powerful e-commerce company that's now pivoted to be primarily an startup investment firm. Yeah. But the Inception program that you led, why don't you tell us a bit about that? Because you can explain it better than I can.
Yeah, so Benos, they originally were called NetPrice, which is an e-commerce firm back in 1999, got listed in 2004. And since 2004, they started building companies themselves, and at the same time investing in companies, primarily in the e-commerce ecosystem, right?
Right.
And we're actually seeing very good successes. Around like 2011, 12-ish, it became interesting for Beanos to basically try to make it a process so that they can kind of build more and more companies like that.
Okay.
Right? And so the Inception program was actually part of that initiative to try to build the next Tenso, the next Brandier. And it's a very, very different model from accelerators. So accelerators, you take 5% equity.
Exactly.
The Inception program is the total opposite. So we would take anything from 10 to maybe 70% of the company, right? And all the talent is in-house, and we would try to build subsidiary companies, basically.
So, I mean, 70% is, a lot of founders would be outraged at the suggestion.
Oh, yeah.
So when you're saying all the talent's in-house, the founder would not necessarily be a Beanos employee, right? The founder is from outside, and you match them up with design and engineering resources within Beanos, right?
Exactly.
70% is a big chunk.
Yeah.
So what value do you add? Well, walk me through the process. If I'm a new founder and I'm joining this program on the first day, what happens?
So to be honest, it's not for everyone, right? It's not for everyone. Obviously, if you have the capabilities of building a startup yourself, you should go for it. But the founders that we've been able to attract are more people who have a strong interest in building and operating companies, but don't have either the inspiration or the idea that they want to work on, basically. But they have more of the passion for operating companies and building companies.
So you're searching for more of MBA types?
Yeah, I guess.
Who's the ideal founder?
So the ones who perform well are like ex-consultants or so like one headhunter is actually leading one of the companies we spun out. And so people who just likes operation, basically, who likes to optimize on operation, loves to work with people, loves to build organizations and those kind of things. And to be honest, they don't have really a strong conviction on the idea.
Okay. What's fascinating about this is you're describing someone who would not normally be considered an ideal founder at all.
Oh yeah,
right?
definitely.
You're saying it's like, it's not, they don't have a ridiculous conviction in their vision.
Yeah.
They're more flexible.
Exactly. So it's the total opposite of what OnLab would look for, or Accelerator look for. Yeah, basically it's total opposite. So usually you want someone with conviction, and you should get someone who would basically grow the company until the end, as big as it can, right? And yeah.
So in the Inception program, I mean, what are the founders bringing? What is Beanos providing? So is the founder bringing the idea? And you guys are providing design and engineering skill. Is Beanos out there selling the products? Can you walk me through a typical case?
Yeah, so the typical case, we basically have a kind of a list of theses, things that we think should be built or exist in Japan. And we would already have developers and designers to kind of prototype the idea and validate the idea. And then the founders would come in actually kind of at a later stage. So once the product is somewhat validated, they would come in to basically build the validated product into a company. So a lot of these people who got brought in to spin out the companies actually came in at a later phase.
It sounds like a very similar model to Idea Lab.
Yeah, so we were inspired by Idea Lab.
Yeah, okay.
Yeah, we actually visited Bill Gross.
All right.
And he was very kind enough to share his knowledge. Yeah, we were very inspired by him.
How long have you guys been running Inception program? It's still pretty new, right?
It's very new. When was that? 2013 or something? We actually ran it for just a year. So it's not running anymore.
Oh, you shut it down?
Yeah, we shut it down. So we spun out two companies out of the program and then decided to basically focus all our resources on the companies that are doing very well.
Okay. Why'd you wind it down?
It was very difficult. So it was really difficult. I mean, so we have yet to see whether or not that's a successful program.
This is particularly interesting to me because I've seen so many companies attempt similar models. Okay, Idea Lab, they seem to have done pretty well with it, but that's Bill Gross. I mean, I think he'd succeed with any model you put in front of him. Rocket Internet's done reasonably well with it.
Yeah.
But what was the biggest challenge in that?
Oh man. First of all, we have a lot of restrictions, right? So one is capital restrictions. Because we're a listed company, we have expectations on how much profit we make in the next quarter and those kind of things. So the problem of running an incubator-like program, like as a public company, is very difficult because you kind of become short-sighted.
Okay. I could see that.
When a lot of the valuable companies, they actually view things much long term, right? They're not profitable for a while, but for us, we don't have that choice. We have to be profitable quite quickly, right? And so that gives a lot of restrictions and limitations. Is one thing. And the other challenges are one is cultural fit, right? So basically, the company has been around for more than 15 years. It's really hard to build a culture that is thriving on entrepreneurship, a risk-taking culture, basically, in a corporation or in a corporate-like environment.
I could see that, because once you go public, all the incentives are aligned to maximize the profit for this quarter, and Japanese companies maybe don't feel the pressure as strongly as American public companies do, but the pressure's certainly there. When times get rough, like, wait, why are we spending this on these companies that may turn a profit in 5 years' time?
Yeah, exactly. So the reason why we winded it down was because there were so many restrictions, and we didn't see it as an ideal environment to be building companies. Is one thing, and the other thing is because Beanos is now out of phase. They had bigger opportunities, like the Tenso. So they're Tenso and Brandier, which is doing very, very well, and it was now is the moment to be investing more in these two companies. Right?
Okay.
So yeah.
Do you think if you could start it again from scratch with a private company, do you think the model is viable, but just the problem was trying to run it inside a public company, or is the model itself just difficult to execute on?
I think the model is viable.
Okay.
The model is viable, but it's best to start from scratch. You need to be in an environment where you can basically build your own culture, right? And it's hard to build in an established environment, and you don't want restrictions on have a certain amount of profit by the next quarter. And those kind of things, right? If I had to do it again, I would probably do it as a private company.
One of the common complaints I've heard from people trying to execute this model is that it's very difficult to get follow-on funding. When you take your incubated company and you hatch them and you try to raise a Series A, I've heard that the VCs will look and say, wait, you guys have 70% and they have 30%? No, we're not interested. Did you run into that?
Yeah, definitely. Yeah, okay. So actually we had a huge adjustment on our equity stake, right? So we first thought we can start off by 70, but we actually had to put it down to somewhere between 20 and 30. As VCs, it's obvious. So as VCs, you want to invest in companies where the founders is motivated enough to basically take it till the end, right?
Right.
And if
they
someone
feel like they own it, right?
Right. And they need to have ownership. They need to feel like it's their company, right? The only way the 70% model would work, I feel, is when the company that owns 70% is willing to keep on funding this company. Right.
So like the Rocket Internet model.
Yeah, basically, right? So the Rocket Internet, I think they have a pretty good and interesting model, and they're willing to fund it themselves.
Sure,
right?
Sure.
Although I guess they're fundraising from the holding companies fundraising from elsewhere, but yeah.
Let's talk about accelerators in general. We mentioned earlier, for a lot of reasons, there's been this real boom and spread of accelerators all over Japan. There's a couple dozen of them in Tokyo. What kind of founders should consider joining an accelerator, and what kind of founders are better off taking a run at it themselves?
So I think I highly recommend accelerators to a lot of the founders, especially in Japan. And the reason why is because the support system in Japan is not as good as Silicon Valley, obviously, but it's very hard to get advisors who can help you basically go through the process of validating your idea, building a product, and fundraising. Because of the lacking of the support system, it's probably best to go to an accelerator.
When you're talking about a support system, does that include kind of the social support of a lot of the founders I talked to? Their friends and family were not particularly supportive of their decision early on. Does that play a big part in it as well?
Yeah, I think so. So I mean, it's lonely to be an entrepreneur, right? And so one is you have a community or a small community of people, at least who's in the same accelerator as you, who supports you and where you can kind of riff your ideas or your problems. And the other is because a lot of these accelerators are backed by larger companies, it gives a little bit of validation. If you worry about how your parents think of you, then it gives a little bit of validation that some large corporation is backing you, right?
Okay.
And so there is some of that aspect. Primarily, I feel the startup community in general is not super helpful to newcomers, right? And in Silicon Valley, I feel like everyone has this pay it forward kind of mentality.
Yeah.
And it's relatively easier to get a meeting with experienced entrepreneur, whereas in Japan, it's a little bit more closed.
It is.
Yeah.
It's a shame. It's starting to change,
Yeah.
but it is. Well, this is something else I found, because Japan is the whole structure of the society is a very strong concept of inside and outside, right? Silicon Valley is very open. Everyone wants to work with everybody. Are most of the accelerators in Japan, are they run like a closed shop, or are they flexible about working with people from other accelerators? Are mentors in one group willing to go talk with a different group, or is that sense of inside and outside still strong within the accelerators?
Yeah, I feel like the sense of inside-outside is pretty strong, so I don't see much collaboration amongst the accelerators themselves, but I see a lot of overlap with mentors, right? So mentors come in and out of different accelerators. The accelerators themselves, I guess, there is a little bit of clan-ish kind of mentality, I guess.
Yeah.
There are multiple clans and they're not really working with each other and those kind of, I mean, but it feels...
So instinctively, I'm thinking like, oh, that's not good. That's got to change. But is that actually causing any damage, or is that just kind of the way it is and it's fine?
From the entrepreneur's perspective, I feel like it doesn't make a big difference as long as they have access to strong mentor network, right? And then since a lot of these mentors, especially the local mentors, they overlap. Yeah, so I feel like there's no big difference in terms of access.
Okay, so the companies that graduate from an accelerator, do they stay in touch? Do they consider themselves like alumni, as it were? What's the experience like post-accelerator?
Yeah, there's definitely a strong bond between, especially if from the same class. Even between different classes of accelerators, they interact with each other quite frequently.
That is good.
Yeah.
The complaint I hear most often when speaking to new founders is the difficulty they have in networking for staff, networking with other founders, networking with other engineers. And the fact that the graduates, the accelerators, are continuing on, they're making their own community and growing it is, well, really the only way that problem's going to get solved. So I'm glad to hear that's happening.
Definitely.
There's so many accelerators in Japan, and God knows how many in the US now. So from a founder's point of view, how can they tell a good accelerator from a bad one?
I think it's very obvious, to be honest. It's you talk to a few founders and then ask them which one do you think is the best accelerator, and they'll point to you in one direction, right? And so
well, that comes to a very short list of names.
Yeah.
Usually, both either in the States or here in Japan.
Yeah, I feel like there's only like one or two really good accelerators, right? And
So of the other, probably 30 plus accelerators operating in Tokyo right now. So you think the majority of them are not providing real value?
Yeah, I would say so. The majority of them are started kind of off of either trying to get on the trend, or they're starting it because, I don't know, their CEO thinks they feel like they have to do an accelerator, right? Or those kinds of, and a lot of these accelerators are corporate ran, right? I mean, even Open Air is corporate ran. For the majority of the accelerators, it's not ran by the right people. They're all kind of salary man starting these accelerators, and they're doing it just because either their boss tells them to do it or because it's a trend.
One of the things that I think you really got right at Open Network Lab is venture capitalists and corporate guys kind of running it. But you made sure from the very beginning that there was a steady flow of entrepreneurial expertise involved and coming through.
Yeah.
And I find that most of the incubators here don't really have that.
Yeah, it was almost accidental, to be honest. Like, it was because I was clueless. The only people I can seek for help are people who've done it before, right? Or built companies before, and those kind of things. So I really relied on mentors, right? And mostly because I had no idea what I was doing. Now I have a little bit better idea.
Well, I think not knowing what you're getting into is both a blessing and a curse.
Yeah, definitely.
It lets you achieve so much more, and it makes you work so much harder than you ever would have otherwise.
Yeah. I mean, the program did evolve a lot. I feel like it's now a much better program than it was, 4 or 5 years ago.
All right. With so many incubators, and this is true in Japan and the US, it's just a matter of scale. Do you see a shakeout coming in the market? There are not that many viable startups coming out, and there are so many incubators throwing little bits of money at them. Pull out your crystal ball. What do you see happening to accelerators in the next 5 to 10 years?
So what's going to happen is probably 99% of the accelerators are going to either shut down or be almost non-existent or inoperable. Or the best entrepreneurs would try to get into the best accelerators, right? And then there's only maybe 1 or 2 really good accelerators, and there aren't enough entrepreneurs that can basically fill in 30 different accelerators, right? So they're probably going to enter the top 2 accelerators out of the 30, and so the rest of them would probably cease operation in some way.
But see, that's going on like right now.
Yeah, I mean, right now is the moment.
We're still seeing new accelerators opened up all the time. Yeah. What do you think is going to be the trigger that's going to get most of these accelerators out of the business?
It's hard to say. I mean, obviously, if there's any correction in the public markets, since a lot of these companies are ran by publicly listed companies, there would be some response to that. I feel like we'll continue to see more accelerators because people feel like there's still opportunity, and I actually do think there's still opportunity to build a really, really good accelerator in Japan. And
so you've built 2 of them so far. Do you have plans for another?
No comment on that.
Come on. But you're thinking about it.
Probably not an accelerator format.
Okay.
Not an incubator format either. Yeah, but I do feel I feel like the number 1 spot is still fillable.
Okay, yeah. I look forward to that one. Let me ask you a few really big Japan questions, right? So what do you think is really driving this startup boom in Japan now? And do you think it's something that's permanent, or do you think it's going to be a fad kind of like it was around 2000?
It's definitely very different from the 2000 bubble or boom.
Yeah.
Because, I mean, we know much more about building, especially internet companies, right?
Sure.
And people are still kind of scarred from that experience. So everyone's still relatively conservative in funding and those kind of things.
Well, I have noticed that Japanese investors, they are conservative. They might miss out on some of the big deals, but they tend to place more sensible bets.
Exactly right, and because of that, I feel
at least in their domestic investments. Some of the stuff they invest in the States is another matter.
Yeah, it's a different story. So we probably won't see anything like a bust going on. So that's probably the biggest difference. But I do feel like we're going to see steady growth in the number of startups being built, steady growth of venture capital funding. Things are changing, right? Things are really changing. So the Sonys or the larger companies are not becoming such an attractive choice for career, right?
No,
right? And back then, it was all about picking one company and spending 30 years there, right? But now it's becoming less like that.
Well, it's not really an option anymore.
Yeah, right.
And that whole lifetime employment thing is a thing of the past.
Exactly. And so the idea of stability is kind of fading away. I feel like in a culture, very slowly though, very, very slowly. I feel like we're going to see more and more people looking into alternative options. Entrepreneurship is becoming a viable option, or almost not, I wouldn't say stable, but it's an option that's actually realistic, and we'll probably see more growth.
Do you see it becoming more socially acceptable in our circles? Obviously, entrepreneurship is very socially acceptable, but in broader Japanese society, do you see it becoming a normal career choice?
Maybe in 20 years.
Yeah?
Maybe in 20 years. We still have so much potential. Like Japan, I'm a little bit disappointed we're not growing faster in terms of just the number of startups and the number of venture capital funding. Like, we have such great infrastructure. It's such a great environment. I mean, the public market it's pretty good.
Yeah.
It's pretty good, right? I'm surprised we're 1/10 of the venture capital spending of the U.S. because our population is like a third, right, of U.S. Right? So we should be we can do 2x or 3x more, and there's still more potential in Japan, and I feel we'll get there. It might take 20 years until we get there.
I hope it doesn't take that long. So, but do you think we were talking about the venture capital investment, do you think it's primarily the problem's the supply side? There's just not enough good companies to invest in yet?
It's both. Not enough entrepreneurs that are looking to start companies, and not enough venture capitalists that are looking to fund these companies. So it's kind of like it's both. Yeah.
Okay.
Yeah.
All right.
Yeah.
For the young Japanese entrepreneurs who are starting companies now, what's the most common mistake you see them making?
It could be because it's kind of engraved in our DNA or culture, but they look for perfection.
Okay.
So they look for a perfect product or a perfect solution, or it has to be at least built in the way they initially planned until they launch it or have some customer use it, when they could have probably tested a lot of it before that, a lot faster. So
the idea of a minimum viable product it's hard for some people to accept at first.
Yeah, so I think so the concept of MVP is probably the hardest part of teaching in Japan. I mean, it's starting to become, people are starting to get used to it, but initially when I was running the accelerator, a lot of my work was actually trying to redefine MVP for them, right? You actually can do this, using some line chat or something else, those kind of things. You don't even have to build a product to even provide your MVP to your customers. So it's basically they feel like they need to build something. They feel like it has to have all the specs that they initially planned and those kind of things. And especially for first-time entrepreneurs, I see that as a big pitfall.
So they need to let go of the need for perfection.
Exactly.
Well, before we wrap up, let me ask you, if there was one thing you could change, if I gave you a magic wand, right, and there's one thing you could change about Japanese culture or society or legal system or anything at all to make things better for entrepreneurs, what would it be?
To be honest, I wouldn't change a thing.
Really?
Because I do feel we have potential. We can probably become 3x better than where we are in every metric.
So you think everything's kind of on the right path?
I feel like we're on the right path, and we just need some agent that would accelerate things, right? Either it's a person or it could be most likely a person, right? And it's probably my job to do that. So, I really wouldn't change a thing. Even if the supply of venture capital increases by 2x, is that really going to change anything? Maybe a little bit, right?
But it needs to have the supply of the startups to increase along with it,
right? And those kind of things. So, I wouldn't change a thing.
That's awesome.
Yeah.
No, I think that's Japan is on the right path. Is a wonderfully optimistic note to end on.
Yeah.
I think that's great. So, listen, thanks so much for sitting down with me.
Yep, thanks.
It's fantastic.
Yeah, that was fun.
Yeah. And we're back. Now, Hiro left us with a bit of a cliffhanger at the end regarding what he plans on doing next. Reading between the lines, it's not too hard to see that he has something big planned. And knowing him, something very different. In fact, by the time this show airs, he might have already made that announcement. Now, what fascinated me most about Hiro's story was his willingness not only to admit that he did not know what he was doing early on, but to embrace it. To embrace your own ignorance and incompetence, and then scramble like crazy to improve, and then to keep improving, even when you knew you were the best at this point. The willingness to bite off more than you can chew and then chew like hell. If you've got an experience with or an opinion about startup accelerators in Japan or elsewhere, come on over to disruptingjapan.com/show25 and let us know what you think. When you drop by, you'll find all the links and sites that Hiro and I talked about and much, much more in the resources section of the post. But most of all, thanks for listening. And thank you for letting people interested in Japanese startups know about the show. I'm Tim Romero, and thanks for listening to Disrupting Japan.